Okay, um, I think we'll get things started. I hope everybody can hear me right now. Rucky, Ron, Jake, you guys okay hearing me?
Yes.
Loud and clear.
Yeah.
Fantastic. Yeah, so first and foremost, I'd like to sort of kick things off by introducing myself, and then we'll dive into our panelists in just a second. My name is Mohammed Rashid. I am the co-founder and CEO of Doorr. For those of you not aware, we are a digital mortgage platform designed specifically for the broker industry. And we're extremely excited to have the opportunity to host a discussion really on how brokers can survive a pandemic, a topic that I'm sure is going to resonate with a lot of the attendees here. And I'd like to kick things off by thanking everybody who signed up for the session, for joining it today. We actually had over 350 people sign up who are in the midst of attending the session right now. So really, really good turnout for us. Now, this is one of the things to call out is this is going to be the first of many online sessions. And so as with any first time of anything, we're going to be ironing out a few kinks. So if anybody who's participating today has any feedback, feel free to share it with myself or the Doorr team after the session today, and we look forward to improving some of the sessions coming up. Now, I think it's really important to discuss why it is we created the series that we did. When we did design it and when we came up with the idea to build something like this, we essentially had three objectives in mind. One of the first objectives was specifically focused on the impact that COVID-19 has had on the mortgage industry thus far, and the fact that this is an opportunity for all brokers essentially to collectively band together and foster a sense of community. And I think there's an enormous opportunity for brokers to essentially share their experiences, their ideas, their opinions, but most importantly, learn from one another. Now, the second objective we had in mind was really centered around the sort of constant bombardment of information that brokers are faced with on a daily basis. There are lender updates, there are government programs, there are regulatory changes, and each of these things will continue to evolve as the COVID-19 situation unfolds. And so most of these sort of information updates can cause information overload for the average broker or agent. And so, the landscape continues to shift, and we felt this was a really good forum to not only discuss relevant topics in a timely manner, but more importantly, allows us to share information at scale, more specifically in a conversational format. So it's one thing to read an update that you might receive from the CMHC or from the Bank of Canada, but it's another thing to actively discuss it amongst your peers and get a much deeper understanding of how it's not only going to impact your business, but how it's going to impact the clients that you service on a daily basis. Now, the third and final objective is really focused around enabling and equipping mortgage brokers and agents with the tools they need to essentially capitalize on the shift in channels for mortgage origination. We're of the opinion that consumers are going to look to the broker channel for optionality. They're going to look to the mortgage broker industry for an increase in their likelihood of approval. And we think brokers need to start thinking about how they can get prepared on ways in which they can seize that share of the market that's now going to shift towards their direction. And so if we're going to dive into the specifics of today's topic, it's really focusing on really the impact that COVID-19 has had on the industry itself. And it really boils down to, who's going to survive this pandemic, who's adjusting their business models to adapt to the situation that's in front of them. Because really no one is immune to a pandemic. And the fact that there's been an enormous, unprecedented impact to the number of industries, we've seen massive layoffs over the last little while, and those have had and will continue to have ripple effects on both the real estate and the mortgage space for the foreseeable future. Now, that's gonna directly translate to brokers, having more difficulty closing some of their existing deals. There's going to be a lot of uncertainty around some of your existing clients on whether their personal situations have changed. Are they still able to follow through on some of the transactions they've committed to? And what are you as brokers doing to help accommodate those situations or navigate your clients out of those situations? Now, you're also going to face challenges on sourcing new business. So it's not only a past clientele business, but we're going to talk about a massive reduction in home showings, a massive reduction in registered offers happening in the purchase space. And so if your business is split between refi and purchase, how do you now navigate the waters to be able to continue to have a relevant business moving forward? In all honesty, I think it's important to understand that this pandemic is going to determine which brokers have what it takes to weather the storm. And for some of us who have been around in the industry a lot longer than others, you might have weathered a few storms in the past, and that's where this is an opportunity to draw on that experience. But for some of the newer ones, it's helping gather that intel on what it is they can do to succeed, which is reason enough for us to essentially continue discussions like these so that we can all come out of it ahead. I hope that makes sense in terms of the context of why it is we're holding these sessions. Like I mentioned, This is the first of many, and so we're hoping to gather as much intel, advice, experience we can gather from some of the most successful brokers in Canada. And for those of you listening, if you are newer in the industry, this is a great resource for you to gather that information from. Now, I think diving into the details of the session itself, again, there's folks who've got to get back to work, so we'll run this on a pretty tight schedule. But this specific session is split into two parts. The first part is going to be a moderated discussion between our panelists, who thank you for joining today, and I'll introduce very shortly. The second part of the discussion is going to be a Q&A for any of the attendees that would like to ask our panelists a question. We do have a cutoff towards the end of the session, so we'll do our best to get to as many questions as possible before the end of it. And if you are interested in submitting a question, in your Zoom window, you'll notice at the bottom there is a Q&A button. If you simply click on that, it'll open up a pop-up modal that'll allow you to enter your question, submit it, and again, we'll aggregate it on our end, and we'll review and answer as many questions as we can towards the end of the session. Now, I think that's enough of me talking. I know why all of you are here. It's not for me, it's for our three spectacular guests. And so I'd like to introduce all three of them to you today. The first one we have is Ron Butler, almost a man who needs no introduction, but he's been in the industry for the last 25 years and is the founder and mortgage broker at Butler Mortgage. Him and his team operate brokerages in Ontario, in BC, and Alberta, and they've consistently been recognized as a top brokerage across Canada for the last few years. And Ron's sort of self-described bio is he's the man, the myth, the legend, and I'll leave that to your interpretation in terms of what that means to you. So the next person we have is Rucky Dingra. So Rucky is the founder and mortgage broker at Mortgage Savvy. She started her brokerage back in 2015 and has made it her mission to essentially challenge the status quo around the transactional nature of the mortgage industry and really focus on building relationships. And she's also been consistently recognized by the Canadian Mortgage Professionals magazine as a woman of influence, not only for last year, but the year prior as well. So 2 consistent years in a row. And the last, third and final panelist is Jake Abramowicz. And Jake's been working in the mortgage industry independently for the last 17 years. And he's consistently grown his volume year over year. And so, Jake, you've weathered a number of storms yourself. And I think most notably, you funded 280 deals last year alone with a single assistant. Now, you have an interesting focus. You know, you've always been on dead set on efficiency and optimization. And the fact that you run an entirely remote operation and you've never met any of your clients in the last few years. And that's down from, I think, 100% almost 5 years ago. But most importantly, coming out of this, I think, you're most proud of being a dad, and you're probably one of the biggest Raptors fans we have attending this session today. So if anybody's interested in learning when the NBA season is going to come back, whether there's another championship to be had, feel free to chat with them right after. But I genuinely appreciate all three of you participating today. I think it's going to be tremendous value for all the brokers and agents who are listening in right now. But if we can just dive right into things and kick things off, one of the first things I'd like to understand, and I imagine everybody else listening in would, is amidst the entire COVID-19 situation, what's the immediate impact that each of your respective businesses have seen thus far, and what are you doing to navigate through that? And if it's all right with you, Ron, if we can kick things off with you first.
Certainly. Thank you for the longest, not actually the longest introduction in the history of the mortgage business. That honor belongs to an executive at M3 who took 19 minutes of a 45-minute session at symposium to describe his whole life story. So you're close, Mo. Very close. It was very close. Literally longest introduction ever. I forgot the question. The introduction was so long. So what's happening in the business? We probably will see purchase volume in the GTA drop by 80% by the end of April. So that's going to be obviously a cataclysmic event for both realtors and mortgage brokers who deal in purchase volume. There's a whole raft of other things going on to do with underwriting tightening, which by the end of April will be the new form that underwriting will take won't even resemble what we've experienced in the past. And more good news, by sometime at the end of the summer, valuations will start to drop, so refinances will be more difficult. And but otherwise, nothing but good news.
And and just looking at the current situation, you've got a pretty sizable team. As your team, are they running 100% remote? Have you seen a drastic reduction in your volume thus far? Like, what are some of the immediate impacts that have happened so far?
Well, we don't have a team. They're a team of people who are all salaried employees.
Right.
So they're all working remotely with the exception of two. So we have a 12,000 square foot office with 3 people in it right now. And the we're going to see starting in April. We have a huge pipeline. We've got like 300 deals to close, maybe more, 340, something of that nature. But certainly by the middle of April, it'd be an enormous pipeline reduction. That's what we expect.
Okay. Okay. And sorry, just on the topic of the fact that, majority of your team is running remote right now, were you guys prepared for this? Was there a massive sort of planning session around what that migration was going to look like? Has there always been a remote work policy in place? Was it an easy transition for you?
Not easy at all, but it's over. I mean, we had to do it. We've never met anybody. We're 12 years not meeting anybody. So it's just that part of it in terms of our ability to deal with clients was just instant. It was effortless. It was all we ever did. We never meet with anyone. So that was simple. The nuances of getting everybody working from their homes was a little bit challenging, but I mean, it just had to be, and it's done now, and we just keep moving forward.
Good to know. Recky, same question to you. What's been the impact on Mortgage Savvy, and how are things evolving for you?
We have a unique structure. We are a team-based brokerage, so I do have 4 full-time mortgage agents and support staff. Support staff, a few of my support staff will work remotely, with a few actually being in the office. So for us, it's been quite the transition. Very honestly, we've had to move, the life and work sort of lines have been blurred. And what I found is personally, we've had to ensure that we are having more sort of structured, open and frequent sort of conversations through Zoom and through Google Meetup, just to stay in touch. I've had to get creative very quickly, ensuring that, because we are a team-based brokerage, you will sometimes have multiple, hands on a deal. We do 100% of our client meetings in person, which has also been a little bit of a shift. And just ensuring that we are, well versed in the technology to be able to kind of lead our client calls through an online Zoom call. But we've been successful in implementing some fun strategies. We start our days with a team workout at 9 a.m. that takes us to 10 a.m. We all have, the time between 10 and 10:30 to kind of, take some personal time, whether that be to shower and get dressed and grab a bite and just be prepared to kind of, tackle the day. We have a 12 o'clock lunch and catch up call, really just discussing any issues that we require support on, and just really ensuring that we're also encouraging, coaching calls and additional sort of support for the team to just keep in a positive mindset and being up to date and current so that they can also accurately support and advise their clients as they're receiving phone calls. So it's been a transition, but I think, we're kind of midst into week 3. I feel like we finally have found our bearings, and day-to-day life looks different, but it's definitely functional.
Yeah, no, I find it interesting that you guys have team workouts, team lunches. I think, my own personal experience, the working from home has definitely made me a lot more productive, but I think there's a certain level of sanity that needs to stay intact, and finding ways that you can sort of disconnect for a certain moment, go for a walk, get a breath of fresh air is really important. And you see that you guys are employing that team wide versus just on an individual level. So that's really good to hear. Jake, it's you and your assistant. I don't manage it's been much of a drastic change, especially because 100% of your deals are remote. Have you seen a reduction in volume? Have things drastically changed for you as a result of the COVID impact?
So I want to touch on something that Recky said, the human aspect of all this. So I'm kind of like, I feel like I'm on an island by myself here. I don't have a team. I don't have people under me or anything like that. My biggest challenge has been managing my son's relationship with his school. He's only 8, while trying to work full time. So for all the brokers out there, believe me, you're not alone if you're trying to manage that and handle volume, whether it's big or small, trying to grow your business. That's been the biggest transition for me. So I'm quite frankly taking most of the mornings off until about 1 or 2, get him going. And then I start going until about 10 or midnight, depends on how long I need to be in the office for. I try to do my business 33% refi, 33 renewal, 33 purchase in an ideal world. So those numbers are obviously going to shift. The purchase side will absolutely dry up. I talk to realtors every day. Big book of my business is my realtor base, and they're all nervous and scared and worried, or maybe some of them are naive and don't think that there will be much of a change. But certainly, I will absolutely not hit the volume I hit last year. But yeah, like you said, my assistant and I, we don't see each other more than once a year for a Christmas dinner, and we've always been running a very lean operation. So that hasn't changed for me in that regard.
Okay, good to know. Yeah, I can. You know, the kids at home resonates with me as well. I've got a 4-month-old and a 3-year-old, and meetings have become a lot more eventful with, you know, running, screaming, crying, and in the background. But it's you know, it's refreshing to know that people are a lot more you know, respectful towards it. They're a lot more understanding, and so the world moves on just in a different fashion. So,
Yeah.
you know, on the topic of sort of the reduction in volume, you know, a lot of brokers more commonly than not focus on net new business. So, you know, new leads coming in, result of purchase referrals that might come from realtors. Has that strategy sort of shifted in terms of, are you guys looking towards your past clients, your existing sort of user base, and is there an opportunity to work with them to understand their situations, how they might have been impacted, and folks that you might not have engaged with in the past, is there an opportunity to connect them now, especially under the current circumstances? Jake, if it's all right with you to sort of kick things off on that.
I'll be straight with the community. I'm very bad at post-closing follow-up. It's not part of my regular process, and I'm absolutely excited about the opportunity that COVID will give me, which is time, because I've been busy closing and just closing every deal I can get. I haven't been busy following up with people after 6 months, a year, etc. All those good things that you hear. So if you're starting a brokerage, starting your own book of business, focus on that, because right now it would be an amazing tool to have. So yes, focusing on the people that I have, quite frankly, neglected is one strategy, and continuing to keep a good touch point with all my referral partners, whether that's realtors, financial advisors are a huge one right now, especially during, you know, these times, lawyers, family lawyers as well. So I'm just keeping in touch with everybody that's referred me business in the past or has been a client of mine. And I just have time to do that, which is great. What I'm not doing is selling myself. I'm trying to just lend a hand to people. And now is not the time to say, hey, I'll help you with your refi. Now is my time to say, do you need help with your referral, deferral, etc. So that's what I'm trying to do.
Yep. No, good to know. And I guess, Ron, from your perspective, has the strategy around lead generation around the clients that you're focused on changed over the last little while?
Well, the first thing we did, we suspended advertising 2 weeks ago because we anticipated a cataclysmic event such as we're experiencing now.
Yep.
And we have to wait for this to shake out. You know, I know that a lot of the network bosses and super broker bosses spend a lot of time encouraging people to call their clients, with, you know, trying to be helpful. As Jake said correctly, for a lot of them, it's, you know, if you do it just on a helpful basis, that's one thing. A lot of it's very disingenuous, though. It's just trying to dig up a refinance lead. I don't know this is the time to just pound people for refinance. I mean, the government programs are evolving. They change on a daily basis, on a weekly basis. And I think the idea of encouraging people to take money out of their house just in case is borderline predatory, to be honest with you. If there's a genuine need, if there's something that has to happen, okay, that's fine. But the idea of rainy day HELOC is actually ridiculous, in my opinion. Right. So we expect an evolution of this crisis to the point where, and also, I also knew, because I am very old, I'm probably double the age of Rocky by the looks of her. Like, I'm really, really old. Okay. So I know, I think I'm like double your age too, Mo. So in reality, you know, Jake's 42. So like, he's only like, my eldest son is 42, but that's good. Jake's closer. Okay. So I've seen all disasters already. Right. I wasn't in the war, but I saw all disasters. This is a cataclysmic disaster of unprecedented nature. And I've seen underwriting go wild in difficult times, whether it's 1990, 91, whether it's 2008. Underwriting will go wild. in the next 6 weeks. It'll be like we've no underwriting we're familiar with, or people who are not ancient like me are familiar with, and it'll stagger a lot of people. Now, one of the things I would suggest to anybody who's just recently got in the business in the last 6 months, my really sincere, even though it's going to come off sounding like a complete asshole, my really sincere suggestion is to have their broker owner park their license and go on the COVID benefit, because you just say, look, I have no business. There's no business coming. So they should simply park their license, go on the COVID benefit for 6 months, and reevaluate later. That would be the most intelligent advice I could give to anybody who's just recently started in the mortgage brokerage business.
Okay. Good to know. Rocky, I'm curious on your opinion. How are things changing?
So we're a baby brokerage. I've been in the industry for 5 years. So we had anticipated, connecting with clients on their renewals and refinances, and we had put a marketing plan into place, just given timing of where we're sitting in terms of our brokerage. So we're definitely grateful for that, and absolutely intending on, tapping into some of the strategies we put into place. But I feel that our role has changed from that of a mortgage broker or agent to really just a coach, somebody to be there to call our clients, to connect, check in on them, whether they need coaching and how to, contact their lender for the deferral, what the deferral means, giving them access to their mortgage numbers, just providing as much information as we can to support them. I've been working on monthly budgets with my clients. I've been taking their calls just to, sometimes people just need someone to speak to, and kind of run through what their financial sort of ups and downs are, and keeping them aware of programs that we're aware of. And just providing as much support as we can. So absolutely agree with Ron. I think our role right now is really that of a coach to really support. There's opportunity. I've often said to my team, I wish I could press pause and just take a moment to really slow down and have more time to connect with my clients. And this has really given me that opportunity. We've set some, sort of targets in terms of how many clients that we reach out to on a daily basis. And we lead with a call, into the call with just asking how they are, and if there's anything we can do to provide any support or assistance.
Right. No, that's good to know. I think it's, just sort of segueing this into another conversation based on what you mentioned there. You talked about, deferral phone numbers and making sure. I've seen a lot of Instagram posts. I've seen a lot of LinkedIn posts, Ron, some of which you've commented on around deferral phone numbers being posted, and sort of letting your clients just have at reaching out to their lenders and figuring it out themselves. But I think there's a whole different connection of being able to touch base with them, helping them understand what the impact to them might be. And I think, the market, the broker industry is slowly evolving towards being a little bit more, providing a bit more of an explanation to the clients on what the deferral impact will be versus letting them figure it out themselves. And so, I've seen a lot of brokers posting about it. I know a lot of the lenders are posting their own phone numbers on how to get in touch. I'm curious on your sort of thoughts and feedback about the deferral programs. Is it the right thing for each of these consumers to pursue? Is there anything that they should know about the impact? And is there anything that agents should be aware of that they should communicate back to their clients? Jake, if it's all right with you, we'll kick things off with you.
Yeah, before I address that, I just wanted to say something to Ron's point, because I know that there are some agents here that are new to the industry. Park your license. While you're doing that, don't lose sight of all of the amazing information that the banks will be sending your way. Become voracious readers of all the economics departments. Get all the reports and figure out your angle on COVID, coming out of COVID, because there will be business coming out of COVID. We just don't know what and how it will look. To your point about, I was one of the people that put up a blog post, and I updated all the time about, hey, if you need help, here's who you call. I'm not looking at getting new clients from that. I'm looking at helping anyone, whether it's my client or not. The second thing we did after that was we segmented everybody by lender and told them, you're going to be on hold for 3 to 5 hours. If you wait, they will come up with online portals. Sure enough, they did. It's just simply a matter of telling people to be as patient as possible and giving them as much help as possible. But it's going to be lender by lender, case by case, if you will or won't be allowed to defer your mortgage. There's a lot of misinformation. First, it was investors aren't allowed to defer. Yes, they are. Big banks are going to cause your credit to be damaged. This is all an opportunity for you to get out in front of your readers and tell them what the truth is versus what the media is trying to tell you. So there are opportunities here to look like an expert and be an expert. But about the program itself, I think it's fantastic. I think it's great. I understand that there is interest to be added. I get it that nothing is free in life. But if you've lost your job and you don't have a safety net, this is what you're going to have to do.
Yep. No, that's fair. And so on the topic of posting, Ron, I know you've been pretty active, at least from what I've seen on LinkedIn, around folks posting it and providing their insight and on ways in which to pursue deferral programs. I'm curious on what your thoughts are, whether it's the right programs at the right time. Are there things that clients or brokers should be aware about before they offer them or serve up that recommendation to clients?
I mean, it's going to take care of itself. I mean, it's a legitimate program. It's a necessary program. It's going to be properly used by and large. There's going to be some big financial institutions are rushing through the application so fast, they're probably giving deferral to people who are actively actively receiving money, which is, in an emergency, you have to assume there will be some mistakes made. There will probably be some minor credit bureau things that will need to be fixed. None of this it's all fixable. If you have a legitimate approval, it will all be fixed. There's no reason to scream and yell about the credit bureaus, everything else. So, but most of my posts are addressed to predatory and essentially unscrupulous mortgage brokers who title a prepaid private mortgage as a 6-month deferral program. May all those people rot in hell. I'm an atheist, but if there was a hell, I would love for them to be in there for eternity. If you're going to call a prepaid 6-month private second mortgage a deferral program from direct lenders, my position is you should burn in hell. That's it, period. So there's literally nothing worse than trying to take advantage of people's panic and anxiety. It is one of the lowest things anyone can ever do. End of story. So I beg all brokers to stop that. Don't do that, okay? But look, it's a great program. It's a necessary program. It's all going to work out in the end. But I'm not sure that we as mortgage brokers should spend all our time trying to walk the client through it when in fact the lender is the decision maker. And they are ready. They're now ready. I mean, after the initial deluge, they are well set. They're well organized. They know what they're doing now. And it'll work itself out. And what I will ask of all mortgage brokers, if you're faced with a situation where a client believes they're not getting the deferral that they deserve, I'm going to make a suggestion that you not take up lenders' time and energy by fighting that fight. It's the lender's decision. I mean, one of the things every mortgage broker is going to learn in the next 6 weeks is it is pointless to argue with lenders. This is a different world. It's their money, and you can make rational points about underwriting, but don't say things like you don't understand why they're doing what they're doing. They're doing what they're doing because they have to. That's it. So trying to interfere or trying to appeal, if you feel you must, go ahead. But I will tell you that other than very basic calls, we are not, as a company, pursuing discussions with our clients about, let's see if we can get you a deferral, because it's simply not our world. It's the lender and the client. It's a privacy issue. And it's something we should not try to interfere with a lender or appeal to a lender, in my opinion, unless it's really, really necessary. It's nothing we should be doing. That's my opinion.
Nope, that's fair. And I think, at least from my understanding, lenders are new to these programs as well in terms of what the government programs look like back to them. And so, one of the most interesting comments I read a little while ago was around a client calling into, and Ron, I'm not sure if this was your comment, but a client calling into the banks and getting a different answer on what the program entailed for each of them. So, Rocky, from your perspective, what do you think about the deferral program? Anything to add? And is your thought process more or less aligned with Ron and Jake around it being the client's responsibility and having them engage with the bank, or is there really anything that you could add to that process?
So we have been engaging with our clients, but just to provide them with information, contact information, providing them with a list of information that the lender is likely going to want to source from them, just to be able to prepare them for the call. But again, whether or not they are approved is on a case-by-case basis and at the discretion of the lender, and we do reinforce that. But we also do try to, ensure that we are communicating to clients that what they were initially seeing in the media as if this was being offered as a blanket offering to all, that this is really being approved on the basis of an individual or a consumer being able to demonstrate the need for it, right? They've got to be impacted. So if you're currently employed and you're not seeing an impact to your sort of monthly financial situation, that applying for this program is just really, inundating our lenders with these calls that are, in my opinion, not necessary. But again, that varies from a case to case basis, and everyone has a different situation. But we do try to provide support and just ensuring that we're available to answer our clients' calls, but we do ensure that we're directing them to the lender for that decision and approval.
Yep, perfect. No, and I think that's a good segue into sort of the lender discussion. Ronnie touched on this a little bit, but around the fact that lenders are figuring out how the situation is going to unfold themselves, and so there's a risk to credit evaluation, to the client's profile and their circumstances, and so how credit and how the decision to approve a deal gets factored in is going to change over time, especially with the current climate in the real estate industry. And so I mentioned this earlier, but I was reading a stat just the other day around the fact that there's been a 77% decrease in the number of showings that are happening. And that's based on OREA sort of mandating the fact that, open houses can't happen. But beyond that, there's been almost a 75% reduction in the actual registered offers between February and March. And so there's obviously an impact to not only the mortgage transactions, but looking at it on the opposite end of the spectrum, what do you think the impact to the actual lenders is going to be? And do you feel like they're poised to weather this storm? And you've sort of got this contrast between the big five versus the monoline lenders that, focus on the broker industry specifically. How do you feel like they're going to handle these situations? And do you feel like, I imagine it's going to be more restrictive for you, but do you think, they're going to limit the number of products you have access to? Do you think the lending guidelines are going to change? What do you think the ripple effect of how lenders handle this and weather the storm is going to be back to you? And Ron, if it's all right with you, we'll kick things off.
Well, we're already observing some things. You can no longer borrow any money for a down payment on a rental property. Like, you can't take money out of your own HELOC, even if the ratios work. The banks, I just put this out there to the group. I mean, if you were a chief risk officer at a bank and you observed that there's a family is calling asking for deferral on 3 different mortgages, their home mortgage and their 2 rental properties. And this is the first week. This is in the first week. So one of the partners has lost their job. They're not receiving any money. And there's the threat of the 2 tenants not paying the rent. If I'm the chief risk officer, I'm scratching my head saying, so we did these deals. We probably lent over $1 million to these people if they have 3 properties, 3 mortgages. We've lent them well over $1 million, and they cannot come up with 1 payment on any mortgage within 2 weeks of one of the partners being laid off. If I'm the chief risk officer, I would say to myself, we have made some serious errors in our approach to rental underwriting. That's what I'd say. I mean, and I got a feeling there's more than one of those phone calls. So we're going to see the end of any sort of down payment from anything but completely unencumbered cash in the rental market. That's it. We're going to see self-employed people go under a level of scrutiny that we are totally unfamiliar with in the past. And we are going to see probably some cutbacks in loan to values from various lenders, not the big 5. The big 5 will continue to go on their way. The big mortgage finance companies, the big, very well capitalized ones will just continue along their way as best they can. Everybody will tighten underwriting down in a way we are unfamiliar with. So that is one of the reasons that I suggest that new people get on the COVID bandwagon of getting their income $1,800 a month. And because I'm old, as I keep saying, and I've seen things, and there's no one who has seen the depth of this economic catastrophe, unless you're 100 years old and you're alive in the Depression. Okay, like nobody's seen it. This is if you start to think of, people talk about a V-shaped recovery. So how in the world is there a V-shaped recovery if nobody can eat in a restaurant until July? I mean, can sit in a restaurant until July. How is that going to be a V-shaped recovery? It's frankly impossible. Now, will it get better eventually? Yes, absolutely. I will say one thing about the Ontario real estate market. This is one of the best real estate markets in the world. We have so many positive things going for this marketplace in terms of an incredibly diverse, multicultural, brilliant population of tremendous positives in employment, tremendous positives in immigration. This is one of the very best real estate financing markets to be in on earth, but not for the next 18 months. It's that simple.
Right. Yeah, no, it's you know, the reason we bring up the question, and it's interesting to know that some of the changes are already happening. You know, we look at our counterpart in the U.S. market, and we've seen some institutions actually pause, you know, funding of mortgages because the uncertainty around what home values look like, the uncertainty around client situations, and we imagine if we're looking at our counterparts, a lot of that stuff is going to translate into the Canadian market. And I think there's a degree of separation between the big five banks versus some of the smaller institutions and how they're going to handle these situations and whether they're deposit heavy banks before they lend out. And so, Jake, I'm curious, in your opinion, you know, some of the transactions that you're running through right now, have the terms of the deals changed? Have some of your commitments been updated? Are any of your existing deals that were set to close, have they been impacted? And beyond that, you know, what's the impact of some of your prospective ones moving forward?
I would first want to address Canada versus US for a sec.
Sure.
I heard a great line today from one of my really good colleagues in the industry. He said, Canadian banks are too big to fail. US banks are too small to save. I do echo Ron's point. We are in one of the best markets in the world, Canada, Ontario, BC, well, to a lesser degree, but I haven't seen many impacts to my commitments yet. Sure, there have been a few hiccups. We've gotten through them. I absolutely think that the alternative lenders will pick up a lot of business in the future because they will be a lot more non-conforming. I agree. I'm a little more optimistic in the fact that this is an opportunity for brokers because we do offer more than one product suite at one bank. And that's the only silver lining to all this. I agree with the time frame, 12 to 18 months at least for a recovery. And I agree that we should see these types of changes because frankly speaking, Toronto is also extremely unaffordable. And I know a couple of realtors that are very vocal on Twitter, John Pasalis being one, has mentioned this quite time and time again. People are borrowing HELOC versus HELOC on HELOC to keep buying rental properties, pre-construction condos. I mean, could you imagine being someone that bought 3 Crestford properties and using their HELOCs to finance the down payment, and now they're getting those contracts back and they're being ripped up? You know, this has to change, and this was the caveat or the impetus to change it. Lenders will have to change. Partner with your lenders, respect your lenders, help them out as best you can. I'm getting a lot of calls from lenders, the mortgage companies specifically on bridge loans. I'm reaching out to the buying agent, the selling agent, the lawyers, making sure the bridge is still going to happen, making sure the purchase and sale will still happen. We just have to be very flexible, nimble, and understanding with our lender partners to help them out as well, because we are their source of business.
Okay, good to know. And yeah, Rocky, same question. I'm curious to know what you have to add in terms of deals affected, your relationship with the lenders, and how things are dynamically changing on a day-to-day basis for you.
I think it's important to realize that our underwriters and our lenders are truly our partners, and working with them. And a good broker or mortgage agent is an excellent business case builder. So we've had a few hiccups with a few files and been able to successfully work with the lender and the clients to a successful close. We've had a couple of clients that have had their down payment in mutual funds and have been impacted, where we've had to, push out closing date And again, balancing, whether they're still going to be employed, closer to closing to satisfy employment. I think lenders are going to tighten up on their lending guidelines. I think that's inevitable considering everything we're going through, and not necessarily having a definitive timeline as to when this will all come to an end. So I think it's more important than ever to really understand that when you're engaging with your clients, that you're really being thorough in knowing your clients and completing your KYCs and ensuring that you're working with your lender to accurately advise as well, not to jeopardize an approval down the line as well.
Right. Okay. Good to know. Yeah. And I think that's we talk about the sort of Schedule A banks and the primary lenders that you're particularly dealing with. Ron, you mentioned this a few minutes ago, but I've been seeing a pretty big surge in the private lending, advertising as of late, and the fact that folks are now wanting them to switch over to that space. I obviously know what your position on private lending is, but I'm curious on, what your outlook on the actual private lending space looks like. The fact that it's to a certain degree unregulated right now. Do you think there's going to be a surge just because they're predatory and they may potentially capitalize on individuals that might need capital in the bind that they're in? But beyond that, do we think we're going to head towards regulation of private lending? Do we think that it's going to be a realistic alternative to being able to obtain a bank from a Schedule A bank, et cetera? What's your outlook on private lending for the next, let's say, 6 to 8 months? And Ron, if it's all right with you, take that first.
I want to make a really strong point here that there's a very, very small number of predatory sons of bitches. I mean, they are absolutely the tiny minority. They are who they are. They know who they are. There's a lot of great private lenders, good people. But some people have been doing this for 20 years. For the mortgage agents who have just specialized in, not the lenders themselves, but for the mortgage agents who've just specialized in the processing of private second mortgages in the Ontario, in the GTA in the Ontario area, if that's been your specialty for the last 5 years, my strongest advice is, and you're not the lenders, but not MIC representatives, but the actual mortgage agents who specialized in doing private lending through other MICs or through investors. My strongest advice is to look towards the maintenance of your vehicle. This is extremely important because if you're going to do skip the dishes for the next year and a half, that's going to be your new job, Uber Eats, because it will be. Yep. You need to have a vehicle in very good shape. And you should probably look to try to get your lease on your vehicle reduced because you are dead broker walking. That's what you are. There's no private second mortgages. Within the next 2 or 3 months, there'll be no private second mortgages in the GTA, unless it's at 50% loan to value, 60% loan to value. And there ain't going to be a whole ton of those. That's a small number. Probably 2 people can look after the requirements there. Okay, so it's don't get me wrong, the big guys survive because they're big. I mean, they're big, they're well funded, they've got family money, family and friends money. There's a bunch of well managed ones, a bunch of well managed private investment firms, mortgage investment firms. Absolutely, and they're going to be fine. They're going to suffer. They're going to go through turmoil. They're going to go through angst. There's going to be pain. But people who were just fly by night and they found a few friends of theirs to, particularly in the last 5 years, they just sprung to life in the last 5 years. Right. I mean, it's going to be a bloodbath amongst those investors. I mean, picture this. Right now, with massive first mortgage deferral, if you have a second mortgage, instead of shrinking, the first mortgage is growing. Mortgage deferral means the first mortgage grows. Interest accumulates in mortgage deferral. So instead of your assumption that your first mortgage is getting lower every month, right, it's now getting higher every month if you have a private sector. And by the way, they're not paying. They stopped paying. I mean, and maybe they stopped paying you. We run a private mortgage operation that's just individual private mortgages through our longtime investors. We got 12 calls about mortgage deferral for private mortgage. I mean, that's an interesting concept in itself. So we've got the problem of the first mortgage is getting bigger. the property values are uncertain, and the borrower may be completely unemployed and have no income coming in. If I was to think of a worse possible scenario for a private second mortgage, other than meteor strike on Toronto, I cannot think of any worse scenario. Okay, so like I said, it's the mortgage green mile for a bunch of people who specialize in private, and I'm sorry for them. I'm sorry. And again, invest now in vehicle maintenance. Skip the dishes. Will still be available. Okay.
Fair enough. Rocky, I'm curious, your outlook on the private lending space. Do you dabble in the private space? Do you facilitate deals, and is there an impact to you? And do you think you will as a result of what's going on?
I would shy away from it, which is why we've always referred our private business out and partnered with other, credible brokers to provide our clients with the support when it's required. Just for personal reasons as well, I've decided that I've built my business around predominantly supporting realtors and purchases, a number of first-time home buyers, and now 5 years in, tapping into a refinance and renewal business, I've chosen to step aside and not dabble into the private lending area.
Right. Fair enough.
Lending.
Jake, I'm curious on your side of the business. Do you dabble in it? Are you actually that's a good first place to start. Are you facilitating private mortgage transactions? And if you are the firms that you're working with, are they changing their guidelines? Are they taking a step back and pausing for a minute, sort of reevaluate the market? How's that look for you?
Out of my 280 deals, 6 last year were private. And so I dabble in it. I'm an observer of it. Right. I talk to private lenders all the time. At the end of the day, I'm with Ron. Maybe not so bluntly, but I truly hope that coming out of this, we'll see
as much as I am, for the love of God. Okay.
Good point. I hope we'll have a regulated and more fair private market moving forward, because like he says, some of the things we see are just simply brokers being lazy, can't place it with institutions, brokers not wanting to do it, brokers taking the easy way out. And now's the time for all that to shift. And I'm happy about it, because I don't think that it's fair what's happened. But no, I don't dabble in it too much. And I'm very much more like Racky than most brokers who do a lot of it, because it can be very profitable until the what hits the fan.
Okay, good to know. And yeah, if we sort of look like we talked about the evolution of how brokers need to adapt. We talked about sort of the lender space and guidelines changing, commitments potentially changing, and the impact to brokers. We now have sort of an understanding of the private space. If you sort of look at, Ron, you mentioned this was going to last for the next 18 months. What do you think the stages of how this evolves over time are? Do we think the real estate market is going to correct? Do we think, that it might potentially fuel transactions down the line once we get a better handle on the situation? What does that outlook for the mortgage industry, specifically for brokers, look like? And again, is that 18-month timeline realistic? Could it potentially shorten itself based on certain factors? What does that look like moving forward for brokers?
So what is those system of the levels of grief? What are we going to be like? It's going to be shock, anger, negotiation. I mean, it's going to be something like that for sure. This is really an unknown, very much of an unknown country we're going into. There literally has never been, even in the 1918 Spanish flu pandemic, they didn't shut down businesses. Factories stayed open, and the employees just died and were replaced by other employees. There was a very few people went to restaurants, but some men still went to bars in 1918, and they died, and then new customers replaced them. Especially I sound cruel and nasty in today's, sort of more politically correct environment, but it was a different world in 1918. It wasn't like this at all. Okay, people just worried about making enough money to eat. So, and business owners, yeah, if you catch something, that's too bad, but somebody else will show up and work the lathe here. So we've never experienced this. We've never experienced the shutdown of cities, other than in wartime, because bombs were falling. And that's never happened in Canada. And it's never happened in North America, with the one exception of New York in 9/11. So this is such a big thing that we know this for sure. The level of the level of consumer confidence coming out of this is unlikely to be an absolute rebound. Very unlikely that people who have, gone through their savings and laid awake at night wondering how they're going to pay their mortgage and when the deferral stops and whether there will be a restaurant to go back to or whether they'll be called back, one of the people called back or not. And I mean, this is like a catastrophic mental health event as well. I mean, that's absolutely, that's not even being nasty. That's just true. Okay. So will people all of a sudden, my point has always been, on the day that the restaurants reopen and you can go and sit down and have a meal, will suddenly like 60,000 trips to Cuba be booked? Like, I don't believe they will. Like, I don't believe everything will just spring to life like magic. I believe it will be a profound and for some people, a life-changing experience. And to think that it's going to just all come back again as it was, very doubtful. So we have to gear ourselves to a new world. And, here's like, I'm actually happy to make a commercial for Doorr. The reality is we've got to become, as mortgage brokers, whatever old plotting systems we've used, we have to change. We have to become as efficient as humanly possible. We have to respect the fact that people are no longer, once people get out of the habit of coming to your office and giving you mortgage documents, giving you income documents, I don't expect they're going to think like, wait a second, like, why should I? That all stopped. Why should I start again once the problem is over? Okay. And so here's where a great digital solution to handling documents and to doing a great digital application is going to be more prevalent than it's been in the past. It just will be. And by the way, people talk about tiny things, tiny positives coming out of this complete catastrophe. Well, one of the tiny positives is no one is going to ever have to wait for it to meet an FCT signer again for a renewal. I mean, that has changed. That's going to be completely Zoom forever. It'll be Skype, Zoom, it'll be some other solution. You're never going to have to see an FCT or FNF signer again. It's never going to come back. And lawyers, you just sort of crossed the Rubicon when you decided, after holding out for approximately 30 years, to say that the Law Society said they absolutely had to meet with people on the closing of a mortgage, the signing up of a mortgage, and suddenly in 2 days it was unnecessary.
Yep.
So I got a feeling, guys, and gals in the real estate law profession, you just may have opened a window that you're never going to close. That the digitalization of these transactions is going to be real, because you can't pretend that all of the people who signed up on Skype for their mortgage documents in the last 2 weeks, those aren't all illegal transactions, right? They're legal. So it will continue. So again, a tiny commercial for Doorr, that great digitalization is going to move forward apace in a way that we haven't seen in the past.
Yep. No, I appreciate that. And I think, we'll pause just for a second, just to remind people that towards the end of the session, we will be doing a Q&A. So if you are interested in submitting a question, there is a Q&A button at the bottom of your Zoom window. You click on that, enter your question. We'll address it towards the end of the session. But Ron, I think that's a fair point. There's this one aspect of it, which is how long is this going to last? But what are brokers really doing to adapt and leverage technology to stay relevant? And you're right, this pandemic in its small sort of opportunity is moving the industry in the right direction. You mentioned the legal side of things. I remember reading the Law Society updating their requirements to now allow 100% remote complete transactions from a legal perspective, which is interesting. And the fact that it took something like this to bring forth that type of change. And so when we look at the broker side as well, Rucky, I'm curious on your opinion. What role has technology played for you? What role do you think it's going to play over the next 18 months? Ron talked about collection of documents, managing your leads, et cetera. How does that play into your brokerage and how you guys operate over the next little while you weather the storm?
We live by Doorr, right? So our leads, in the moment we connect with a client. So you've been our saving grace through this transition. Definitely continuing to leverage technology, which we had already been focusing our attention on. The one piece that has dramatically changed for me is the in-person meetings for client signings. We generally do have a mandate within the brokerage to have clients meet with their clients directly to, from the relationship perspective, to really build that connection. So we are now, transitioning into using Google Meetup and using Zoom. It has been highly effective. And personally, what has also helped me realize is that I can continue to transact at the level I have been and maybe have a little bit more of that work-life balance, right? So we are trying to keep that positive outlook on these changes and transitions, and realizing that these may just present opportunities into the future as we continue to, build our businesses and come out of this.
Yep, fair enough. And sorry, Jake, your opinion on sort of the transition towards digital, the outlook for the next few months. How does your you talked about working 100% remote. How does your doc collection work? Are you getting the clients to provide it to you? Are you sourcing it on their behalf? There's a lot of different tools that are available to brokers. How do you not only operate yourself, but what's your feedback to the rest of brokers who might be newer in the industry on how to sort of pursue things or set up the right structure moving forward?
So I'm looking at technology as a big complement to our business, as an option for a client to make it easier for them to give us what we need to get the mortgage approved faster. Now, we are entering a pandemic stage of our mortgage business, which will slow down the approvals and what have you. And frankly speaking, to Ron's point, what he said is, be prepared for this, figure it out. And if you meet every client, that's part of your business model. Keep at it if after the pandemic world, that's going to be sustainable, but use your technology as your biggest complement, as your biggest partner. Mohammed, I met you very randomly. I emailed you after seeing your email. And I'm like, who are these guys? And it kind of, the light bulb went off. Prior to having met you, I did meet a lot of my clients, and it was very, very, great on a face-to-face basis, but the world is changing, and I'm very excited that this technology platforms are available to us. I just hope that the lenders come on board more willingly. I hope that, our industry is very tight with respect to how we submit to lenders. So I'm excited about what you guys are all going to create for us during this pandemic. So we come out of it with tech completely at our.
Yep. No, I think that resonates with us as well. I think if anything outside of Doorr, I think it's shifting the industry in the right direction that enables you guys to do a lot more in a lot less time, which will inevitably translate over to a better experience from a client perspective. And so, it's to a certain degree baffling that the lenders and the legal side of things and the mortgage brokering industry and the softwares that support it have remained as is for as long as they have. And so all it took was a pandemic to move people in the right direction, which is unfortunate, but it's the reality of the situation. And so just keeping time in mind, one of the sort of last things we'd like to close off with is, it's sort of a twofold question, which is really understanding, just sort of touching back on client uncertainty and how folks are how you're putting your clients' nerves at ease. But beyond that, what's some of the advice that you might have from the broker side moving forward from this point on in terms of setting up your business for success? We talked about the different factors that might affect them from a client perspective, from a lender perspective. If there was a single piece of advice that you'd leave the brokers who are listening in with to sort of, the best path forward from this point on, what would that be? And Rucky, if it's all right with you, we'll kick things off from your perspective.
I think it's just realizing that we need to transition with the given situation. I know personally we've put a strong emphasis on breaking outside of our comfort zone, and my agents are doing Instagram live Q&As. We're doing a 14-day confidence challenge because they weren't ready for it, but we are providing the support that we need and leveraging technology and different platforms to ensure that we can stay connected to our realtor base as well as our client base. So I guess just adapting and transitioning and finding your comfort zone as we continue to adapt and make the changes that we need to move forward.
Very good. Jake, curious from your perspective.
I'm going to say, I've been around brokers for a long time. It's a really good time to reassess and reorganize your personal financial world. Do you need that $2,000 a month lease? Do you need all of that office space? Do you need all of these things that make you look good in good times, but they're very expensive and bad? Is your broker providing you the value that you're paying for with your splits? That's one thing, certainly from a personal perspective. This pandemic's going to last a very short time in the scheme of our lifetimes, our working lifetimes. Some of us have been working really hard. I'm looking at this pandemic as an opportunity to maybe take a step back and reassess certain things as well. But I'm also looking at a huge business planning opportunity and implementing new ideas and new strategies while we have the time. Because when things come back, and it will be as long as it takes, what Ron said, 18, 24 months, and it won't be a V curve, but when they do come back, we should be stronger than ever. So just take your time, figure out your finances, figure out your personal lifestyle. What do you want out of this industry? And it will be back, so.
Yeah, I think it's unfortunate circumstances, but you're right. It does give brokers a moment to breathe and sort of plan for the path forward, which is really hard to do on a day-to-day basis when you're most of your focus is on generating business for yourself. And so, Ron, I'm curious your sort of piece of advice for the broker industry. You've got more experience than I imagine this panel put together. So, what's your outlook, and how do you suggest brokers move forward from this point?
I've said a ton of mean things that are really heartfelt, actually. That there's going to be a tremendous look. If you're somebody like the other two people, the two other people on the panel, knowledgeable, skillful, hardworking, technically great, all the other things that you have to be to really survive the onslaught of the next 18 months. As Jake said, you'll come out the other side for sure. But for new people, for people who are only doing, if you just did 10 deals last year, if you originated 10 mortgages, you've got to start to really rethink your position, because the truth is, you didn't gain enough knowledge to handle vastly different underwriting, vastly different lending scenarios, vastly different sound of the phone not ringing. You're not ready for it because you didn't do enough deals. So you have to reassess your situation. Again, sounds mean, but it's truthful. And for those of us who are fortunate enough to have done well and done a lot of deals and gained solid understanding of how things work, just as Jake said, adjust lifestyles immediately. Don't wait. One of the great leaders in immunology is an Irish doctor who, at the very beginning of this thing in February, said, "Just do everything right now. Do it all right now. Throw the sink at it. Throw the kitchen sink at it, and then throw another one at it. Okay, tear the bathroom sink up. Like, do everything you possibly can to restage your finances, understanding that it's going to be radically different in the next 12 months. Save yourselves first, and think hard. But don't wait. Don't wait on anything. Don't wait on anything. If you need to park your license, if you need to look for another type of work, if you need to look for part-time help, whatever you need, don't just believe that, listen to this. I'll tell you this. When you hear people tell you that there is enormous opportunity in a crisis, it's true, but it's only true for the top 1% of society. It's only true for the super rich who can move money in a way that allows them to take advantage of other people's misfortune. Okay? It is not for everybody. The vast majority of human beings in this horrible economic catastrophe are going to feel nothing but pain for the next 12 to 18 months. Nothing but. They're going to feel the pain of loss of their loved ones, the people they know. They're going to feel the pain of being cooped up with kids they love, but they're really scratching their heads about why they love them for the next 3 months. They're gonna, the big news yesterday was China divorce rate soars because because couples had to spend 10 weeks looking at each other only. Okay, so I mean, there's nothing but pain here, and just make changes now. don't wait, don't second guess, don't hope for the best, don't, you know, when your principal broker says, oh no, this will be, you know, basically as soon as the people go back to work, I mean, there's going to be a boom. Every house sale that was missed in March and April and May, they're just going to buy them all in June. Okay, if you're listening to that and you believe it, just switch to edibles. Don't listen to that. Okay, you'll get more benefit from edibles than from listening to that principal broker who says that. Okay,
Sure.
Govern yourselves intelligently. Understand that this is a catastrophe. This is not a blip. This is not a blip. Okay, this is not something that's going to correct overnight. And just take care of yourselves, and don't frame your decision making in any kind of, well, a couple of months, that's all I got to worry about, and everything will be fine. That's not what this is. So that's my advice to people who are thinking about it. Again, if you're 5 years, 7 years, 12 years in, 25 years in, chances are we can figure out how to make this work. Okay, just on depth of background, but not everybody is going to be able to do that.
Fair enough. Yeah, I appreciate the feedback. I think I'm personally guilty of being overly optimistic in terms of this situation unfolding and getting better over time. But I think, you know, as everybody can see, it's progressively getting worse, and there is no end in sight at the current moment. And so I think you're right that folks need to plan, as all three of you mentioned. You know, this is the right time, if any, to plan. And I think getting on it before things continue to evolve is most important here. So we could definitely appreciate that. And so, you know, just keeping time in mind, you know, I think it might be a good opportunity for us to switch over to just answering some questions that might have come in through the session. So if that's all right with you. So we'll just pull up a few of them right now, and we'll answer them out here. Just give me 1 second. So first and foremost, one of the first questions that came in is whether the session is going to be recorded. It is. And so we'll share a copy of the record out to everybody who's attended today, just in case you missed any aspects of it. But one of the first questions that's come up, Jake, if it's all right with you to touch on this first, you know, do you think we'll see property value drops in line with a much needed correction for the market? Like, do you expect the real estate industry to essentially see a correction as a result of what's going on, or and how grossly will property values be impacted by that?
So it's impossible to say what's going to happen Canada-wide. I primarily operate in in Ontario, in Toronto specifically. With a massive sales drop will come price drop. The question will be, will we also see a massive supply drop? Like Benjamin Tal said, will we freeze the market, or will we see a lot of people simply very desperate in order to get out while they can? I absolutely expect the GTA, Toronto condos especially, to see a 15 to 20% price drop. I'm not throwing that number out there, but that's just, you know, I'm not getting that out of any specific data, but I mean, things were just so overvalued in the condo space, in the housing space as well, in the rental market. Yeah, but how much and how fast and how severe, it's anybody's guess, but it would be insane for me to believe it won't. I engage with a lot of Twitter realtors who are very positive and keep saying, look, yesterday a house sold for over asking. They're giving me cherry picking data. They're not looking overall. When we see a 70% drop in viewings and showings, if you can't even go see a house, you can't buy a house. So yes, I do feel like we will see, it'll start with Toronto being strongest, and it'll move out to this 905, 705 regions, which will be affected greatly with job losses, with mortgage relief, with so much. So yeah, I'm scared, I'm nervous, but that's why we plan and buy for the long haul and not for the overnight flip.
Right. Yeah, it's fair that nobody has an 8 ball to tell what's going to happen for the market. And I think, you know, I think that the expectation is that there's obviously an impact occurring right now, and that will continue for the foreseeable future. To what degree that impact will be seen, we don't know if it'll be a full correction or it'll be just a minor reduction. And so time will tell as the situation unfolds, but that's fair feedback.
I just have to tell my son one thing. I'll be right back.
Yeah, you know. So Ron, you know, you talked about earlier about folks sort of planning for the worst case situation. Somebody had a question around what you meant by vehicle maintenance. And so when you were referring to skip the dishes and Uber Eats.
That's going to be your job.
Right. So essentially taking care of your car so that you can run Uber Eats and skip the dishes deliveries.
Exactly. Yes. I'm sorry if that was not as well spelled out as I should have spelled it out. Yeah.
That's right. One of the questions that all of you respectively touched on, Rocky, just come back to you in terms of if you sort of look back at yourself when you started in 2015 relative to what it is now, for somebody who's starting out as a net new mortgage broker or agent, what's your recommendations? What are your learnings for them to be able to set themselves up with the right foundation relative to some of the learnings you had really early on in your career? What advice would you give them if they're just starting out?
Know your lender packages, know your lending guidelines, right? I think this is your opportunity to really take the time to ensure that you're aware of guidelines so that you can accurately execute a deal and provide your client with solutions. I think the fact that we have this slowdown gives us an opportunity to really ensure that we're brushing up on our skills, staying educated, but also at the same time ensuring that you're adopting systems and processes early on. My expectation when I was coming into the industry was to do a deal or two a month. This was not the overall vision. This has happened,
Right.
exponentially on its own, and I've enjoyed being in the business. But I will recommend that newer brokers take the opportunity to really focus on systems and processes and really understanding their lender packages and guidelines.
Yeah, there's a ton of different lenders, a ton of different guidelines, and I think that's that's fair feedback. That having a grasp on what options exist for your customers is an important piece to it. So. That's fair feedback. And I think one of the other questions that came up was around, and Ron, I'll direct this towards you, but we talked about refinances, we talked about purchases. Somebody had a question around how mortgage renewals are going to be affected moving forward in the next few months to the next year from both a lender and a borrower perspective, especially the fact that deferrals are now kicking in. How do you see renewals playing out? You see them being auto renewals? Will lenders change the story around what constitutes an auto renewal, et cetera? How do you see those being impacted?
I'm really not familiar with the idea of an auto renewal. Law requires that the borrower be notified of their future options on maturity. That's the way the act works. So that's just
right. When I say auto renewal, I'm referring to the fact that as long as a client is consistent with their payments, they're on time, the new rate, the new potential mortgage amortization and term will be presented to them that they can just simply sign off on without going through the entire process. And so, what do you imagine the impact of that is going to be, especially with the evolving guidelines?
Well, I think obviously for the people, sometimes, we've got to remember that almost 40% way over 50% of the working population of the GTA either works in the public sector and therefore they're completely unaffected by what's going on, or they work for very, very large corporations. The majority of them are fine. The people who are in those situations where they never requested deferral and they made all their payments, I fully believe that all of the renewal process will remain identical. Nothing will change. For people who are in deferral, there's going to be a somewhat more expansive examination of what's going on. But I believe, again, that the thing we have to understand is the five big banks, six big banks, they work so closely with the federal government, it's almost as if they're all the same. I mean, they are very, very, very closely tied. And the federal government has made it very clear to the banks, here, we're going to give you about $300 billion. So you need to just do the right thing by the Canadian public and not create a ton of difficulty for people. So we're going to observe that there will be not any kind of problematic disruption on renewal. For people who are out of work, for people who have, are around their eighth, they went past the 6 months and they're not be able to pay at all. I mean, that's going to be something that's going to be handled on an individual case-by-case basis. But that actually, the renewal market will become one of the only really viable markets for mortgage brokers in the coming months. I mean, eventually our mortgage, they won't be called mortgage finance corporations now. I used to call them the monolines, but we're going to call them a mortgage finance corporation. Those lenders are going to be able to get their pricing better organized. They're going to get their rates better organized. They're going to be able to be aggressive when it's a less than 65% mortgage that's insurable. They're going to be able to get aggressive on high ratio transfer again. And that's going to be a viable market for mortgage brokers. Unfortunately, it tends to require some fairly aggressive rate discounting to be able to be sure that you're going to get that deal done and take it away from another lender. But it's still an opportunity that's very, very real. I mean, if you got people who are working and it's going to be You know, if you've got people who are working and it's July and their renewal's up and we've got some hot pricing from some of the mortgage finance corporations, we're going to be able to execute on those transactions. So that's something to look at as a viable source. High ratio purchase will gradually come back to life. I mean, that's always going to be price competitive for mortgage brokers. You have to pick the areas that you can do a good job in. To Jake's point, there's going to be need to have a solid relationship with subprime lenders. And this is going to be one time when those of us who are still have access to subprime lenders, because Home Trust made it very clear that they fired nearly 6,000 brokers. So they cut ties with 6,000 mortgage brokers. But those of us who still deal with these companies because we have great relationships with them are going to have some extra tools that the banks don't have. They're not going to be look quite the same as they look today, but they are going to be available. So there is some positives there, and that's what you've got to take out of it moving forward.
Okay. Good to know. One of the other questions that came up was around the securitization markets and what the impact of what's going on there will be on the mortgage brokerage world. And sort of a follow-on question that came up a few times was around the fact that, you know, you see the government, you know, the Bank of Canada slashing its rates down to, I think it's a quarter now. But you see some of the fixed rates going up from some of the prime lenders. Jake, I'm curious on your comments on number one, the impact of the securitization markets to the mortgage brokerage industry, but beyond that, how rates are fluctuating between Bank of Canada and the actual prime lenders.
Well, I'll address the second one first. A lot of clients are reaching out. Hey, I want to renew. I want to refi. The rates are so low. The media is telling me prime's dropping. It's a great opportunity for us to educate people on how banks make their money. And during a deferral mortgage period, it's going to be more expensive for them to run the shop. So the rates will go up. And we just have to correct the media so many times I feel like on a daily basis, weekly basis. With respect to securitization, I mean, I'll be straight with you. I'll defer to Ron. He's an expert in this field. I don't dabble too many times with the VPs like he does. I don't talk to them too many times. So Ron, can you help me out here, buddy?
Okay, so I just refer everybody to two great podcasts there, and they have been released by, and listen, I rarely give shout outs to big networks, but I give a shout out, and it just so happens it's just the one group, it's the DLC group. Gary Morris put on a fantastic presentation with John Webster and Rob McClister about this whole securitization and mortgage rate pricing issue. It's been made available. If anybody wants to try to track it down online, it's a fantastic podcast. It's just full of information. And just 2 days ago, the First Nat executives took an hour out of their day and very few people. There's a couple people I know who are very, very good at this mortgage investment corporation securitization, and certainly Jason Ellis is very knowledgeable, very, very, very knowledgeable. And he put on a fantastic presentation, again, through the DLC operations, a fantastic podcast about securitization. These guys know 100 times more than I do. Suffice it to say, there exists in the marketplace today something that's very simply described as a risk premium. That there is no big metal box at a bank, in the basement of the bank on King Street where the money comes out of to fund mortgages. There has to be a counterparty to a mortgage, whether it's the bank's deposits from their customers, or whether it's a bond or whatever it is. There has to be a counterparty to the mortgage. So today, those counterparties are saying, you know what? I'm friggin' worried. And I'm not just going to price off Bank of Canada rates. I'm not just going to price off of what the bond yields, what the 5-year bond yield is. I'm scared. Like, bottom line is, I'm just scared. And if you want to get me to supply you with money to issue mortgages, you're going to have to make it more interesting to me than 1.45%. So, because if we do primeless 110, I mean, that's a very, very low number. No one's interested in that number. Okay. Some lucky people have it if you had an existing variable rate mortgage, but there is no counterparty, because again, it's not a big box in the basement of the bank on King Street. That's not where the money comes from. Right. So the counterparty who supplies the money, they're not interested in 1.45. Okay, they don't want any part of it, and they're worried. have money to put out, but they want a premium on that money today. And that's why these rates we're offering have completely detached from the 5-year bond yields. They no longer have the same relationship. And that's also why that most of the mortgage VRMs available right now, variable rate mortgages available right now, are at prime or prime plus. And that's the reason, because there just is no counterparty who wants to be involved in a 1.45 interest rate.
Right. Yep. That makes sense. Makes sense. One of the other questions, we'll slightly switch gears here, Rucky, if you're okay to take this one, but Ron mentioned a little bit earlier, brokers should focus on themselves right now. And a few of the questions that are coming in are, this one's a bit twofold, but we've got a broker who mentors other brokers and has done so for the past 16 years, has folks who are interested in joining their brokerage or their team rather. Is this the time to sort of put a pause on that and really focus on yourselves? And the same goes for brokers who have a pipeline of leads that are coming in. Is this the time to hire help to be able to support that? So, should you be bringing people under your wing in the current crisis? But beyond that, if you've got a ton of work, with the ever evolving landscape, should you also be bringing on help to be able to support you with that? What's your thoughts on that?
So I have a team structure myself. So this is my team is, they've been in the industry, they're able to execute deals, they understand lender guidelines. So keeping my team intact is my personal priority, and ensuring that I'm devising a business plan to ensure that I'm supporting them with leads or opportunities to tap into future renewal business as well. But to take on a new agent at this time and put the energy required in training, a good agent or a good broker is somebody that's out there executing business. The only way to build that skill set is to actually transact on deals. And just given the current environment, we are expecting that slowdown. So this may be the time to really focus on your current book of business. And with the slowdown, it also allows us sufficient time to really pause and take the time to focus on our client base.
Yeah, that's fair. And I think there's a lot of uncertainty, not only from a client's perspective around their personal situations, but for the broker industry around, is that pipeline still what it was last week? And are those folks still interested? And as that evolves, I think it's a fair point that, you really need to sort of self-reflect and understand how your business is going to survive the next X number of months versus understanding whether it's the right time to bring somebody else on board. So I think that's a fair comment. One of the other questions is around, so Jake, you touched on this a little bit around becoming a little bit more expensive for the banks to facilitate or fund some of these deals. And so a lot of folks are asking, what's the outlook for the market in terms of when we expect these rates to rebound back to the lower rates that they're expected to be, especially with the Bank of Canada's rate slashed. And so that sort of ties into the fact that, there's massive volume that they're going through right now. Let's say we hit the tail end of that and whatever the influx was based on the current situation, do we expect rates to go back to where they were a few weeks ago, or do we expect them to continue to rise over the next while?
No. I unfortunately lived through the 2008. I saw prime go from prime -1 to prime +1.
Right.
Ron, you remember that as well. That was the only economic malaise that I've lived through in this industry. And then 2017 was a bit different. Guys, first of all, if you're expecting the prime discounts to come back, keep waiting. It's not happening. Variable makes a lot of sense today, especially even at prime or prime plus. If you're expecting prime to drop, it's not happening. We're already at a 1/4 point overnight rate. Bank of Canada said we don't want to go into negative interest rates. It will just not help. Now, it may happen, but I doubt that it will happen. And to Ron's point, the middle person involved doesn't want to lend money out at 2.19, 1.99. We had a blip in that time. Cost of borrowing has gone up. Therefore, the cost of lending will go up. We are only tracking the bond market. Listen to that Gary Morris podcast, and then you'll know how exactly banks are pricing everything, including risk. So I don't expect rates to be dropping anytime soon in a major way, not like we saw 3 weeks ago. And so if you're waiting for that, re-strategize and figure out what to do moving forward, how to repackage deals, how to give clients the right advice, what type of product to give them. And Ron has said this before, and I keep referring to you, Ron, but you say a lot of good things on the internet. And you said, I'm not the one driving the bus. The client is driving the bus. I'm giving them the options. And this is our time. These are your options. This is what I would do. What do you want to do? If you're waiting for rates to drop and giving clients that hope and promise, I don't think that's the right thing to do.
Yep, that's fair. And I think sort of a lot of the themes around the questions around rates, and I think, from a broker's perspective, especially some of the newer ones, want to understand, how does this play out for me over the next little while? And so, Just staying on that theme, if we talk about insurable versus non-insured mortgages, Ron, one of the questions is, do you see that that gap between the types of rates, widening over the next few months as the lenders themselves try to offload some of the risk from their own balance sheets with the government stepping in? What does that spectrum of insured versus non-insured rates look like over the next little while?
Well, the Bank of Canada and the Government of Canada they've essentially lifted the most profound risk from our banking system. A lot of people don't realize that if this happens in some countries in the world, the reason that they impose certain rules is because, and the reason that we do certain things in this country is to make sure that when you put your card into an ATM, money still comes out.
Right.
That when you go to the grocery store and put something on your debit card, it still works. I mean, there's really only three things that are important today. It's healthcare and medical, it's finance, and it's eating. There's only three things to think about, really. If you're the government of Canada, you're only thinking about your British government, even every level of government. There's only three things you actually spend your time thinking about. It's just those three things. There's nothing else. And there's going to be a lot of thinking about other things in 6 months, but right now, this is the only thing. So what will happen with rates, to Jake's point, we got to just give a moment by moment advice about rates. And that's all we got. And when we talk to clients about it, the most conservative thing we can say is we don't believe rates are going down. And you should, if you have a good offer on the table right now, take it, even if it's not my offer. If you've got a renewal offer on your kitchen table from a bank at 2.45 or 2.69, don't hang in and wait for, it's going to be 2.29 again. Let's just wait this out. Do not wait this out. Sign your renewal. Contact the bank. Tell them, yes, I take it. I take 2.49. I take 2.69. Thank you kindly. Okay. Or I take, prime less 20. I mean, thank you. Thank you very much. Okay. This is not a time to become a mortgage guru when nor is it for us. We should not be plotting in discussions with our clients that we know what the future 6 months is going to bear, other than pain. That's all the next 6 months has to bear. There's nothing else. So that's my advice to anybody looking at if they're going to wait for a better renewal offer, you are wrong. That's it.
Good to know. One of the last questions we'll just in the interest of time that we'll cover off on is, and Rucky, if you're all right handling this one, it goes back to brokers starting out and again on the staying on the trend of rates. What's your opinion about brokers who buy down rates and are aggressive in terms of?
I love them all those guys. I love them. Okay.
But really the opinion of, how does that stack up in the current landscape? And, what's your recommendation for some of the newer brokers starting out? Is that how they essentially derive their business moving forward in the current landscape? And what's your overall thought process around rate buy downs in the industry?
Personally, we don't do rate buy downs. That's just a policy of our brokerage. We really strive to provide support, coaching, and support to our clients, and build that relationship where it doesn't become about the rate. It's more focused on ensuring that clients feel properly supported. However, the environment's changing, and we are seeing purchase transactions start to fall, and there will be that additional competition. So I can't say it's something that we may not do in the future, and I can't advise other brokers not to take a potential buy down to secure a deal. We're somewhat in survival mode for the moment, so I think things are going to change and evolve. To date, we have been successful in holding strong and providing clients with the utmost in service and support, and not buying down rates. And it's worked to date, and I'm hoping it will continue to in our specific business model.
Yeah, good to know. And I'm going to ask each of you the same question just to wrap things up to get your opinion on it. But Jake, what's your opinion of rate buy downs, as an industry as a whole, and especially considering the current climate?
Especially considering the current climate, I think you'd be crazy. And Rocky, I mean this with all due respect to all of my people on ILMB and other sites that claim that moving forward, they won't buy down rates. I'd rather make 30 beeps of, 200K mortgage than zero. Frankly speaking, again, it's impossible for me to run a business in a very competitive world with this big thing called the internet and not buy down rates. But I also think that there's a huge pie here, guys. There's a massive space. The mortgage market is very big. You can operate like Ron, you can operate like me, you can operate like Raki, and you can be successful across the board. You don't have to follow one model. That being said, if lenders are going to give renewals at much lower rates because now our rates are higher, you're going to lose that game unless you're willing to buy it down. And I'm a big proponent of it. Look, last year, my average compensation was 91 basis points, and I buy down a lot of my deals. This is going to go back to, is your brokerage, how much are they taking off the top as well? And how much value are they giving you? So you need to figure out what you're paying out to operate your business as much as how much you're making coming in. The splits are going to be important to look at. So there's a way to compete and survive doing all three segments, but I don't believe that it's possible to say moving forward we won't have to be competitive and aggressive.
Very good. And Ron, I'll leave you with the last comment around that question.
Well, I mean, thanks to Jake for touching off the powder keg of discussing splits with your principal broker in this time of crisis. Jake, thank you for that. I'm not sure how many other people will thank you for that moving forward, but yes, yes, Jake, kudos to Jake. It's time to think about how that whole thing is going to shake out. Listen, we are amongst, there's several of us in this country who are endless discounters of rates. It's been our business model. It's not that big. I mean, combined, we probably all do about aggressive discounts. Mortgage brokerage is probably only about $6 billion, $6.5 billion of mortgage broker business. We tend to, people talk about it a lot because basically it's like this. If you're a mortgage broker getting off the phone with your client and you hear a rate and then you get off the phone and you look across your desk at your right now your kid or maybe your dog, and you say, that son of a bitch butler with these goddamn rates. I mean, you say that, and I respect that. That's just the way the world works. Nobody likes to be faced with a different rate for the same product. I mean, it's horrible. I understand that. I'm not going to change what we do, though. Neither is CanWise, neither is True North, neither any of those companies. We're going to continue to do what we do. And it's just a business model. That's all it is. It bears no resemblance to what other brokers do. We are not the same. We're not the same. We're just not. And it's okay. It's not going to stop. We're going to continue to do what we do. But it is, as Jake said, very big pie. And as Raki said, you can give a lot of service. You can give a lot of advice. You can proceed from a completely advice-driven basis if you wish. And everybody can do what they're going to do. But one thing I will tell you for sure that we have noticed in the last 18 months is the banks have changed their approach to price competitiveness as well. When I was never skinnier, but when I was younger in this business, banks were pretty blasé about stuff. They said, yeah, this is our rate. If you don't like it, we don't care. Okay. That's not been true particularly for the last 24 months. Bank road reps have been relentlessly aggressive on pricing, relentlessly aggressive about taking business, every drop of business they possibly can. And I do not see that changing in the future at all.
Okay. Good to know. Yeah. And I think, all of you have fair comments. I think, Jake, you mentioned it best. I think all three of you have different business models and the way in which you operate. And I think the market is big enough that, Ron, to your point as well, everybody can operate with each of those specific strategies, but still come out successful as each of you three have demonstrated within the market. And so, with that in mind and looking at the time, I genuinely want to thank all three of you for participating in the panel for the first of many discussions moving forward. I think there's a wealth of knowledge, like I mentioned earlier on, to share with the rest of the industry. And for some of the folks that, regardless of the spectrum of how much experience they have, there is always an opportunity for each of us to learn from one another. So again, genuinely thanking all of you for participating in the conversation today. To all the attendees who signed up for the conversation, a few housekeeping items. We will send out an email to all the participants that will include not only the recording of the seminar today, but it will include any of the podcasts that Ron had mentioned, any of the materials as a result of the conversations today. But we'll be sending out that out later today. But again, thank you to Rucky, Ron, Jake. Really, really appreciate you participating. Thank you to everybody who joined, and we'll look forward to some of the future sessions.
Thanks, guys. Take care.
Thank you.
Awesome. Thanks so much. Take care.